Hi, everyone. Today, let's talk about payrolls and wages. And then we'll get right into the charts. And then we'll take a look at my results for the day and my positions going into Monday. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open. So make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So payrolls and wages came back today, and they were much better than expected. And we're living in a world where good results is bad for the stock market because that means the Fed is going to be more aggressive and that they can be more aggressive with rates because the economy is still doing well. Non-farm payrolls increased by 263,000, well above the 200,000 estimate. Unemployment rate stayed the same at 3.7%, and hourly wages jumped by 0.6% for the month, double the estimate, and annually it went up by 5.1% versus the 4.6% expectation. Again, you can see what this looks like. Most of these jobs are in recreation and hospitality, which was one of the most beat down sectors, and we're still net down on jobs, which is probably why jobs are still doing fairly well. But we have to understand that as this continues to stay high, the Fed is going to stay aggressive, and the markets are going to react to that. Moving over to the S&P 500 on the daily chart, you can see we finished right at that resistance once again, still struggling in this zone. Right on the news of the jobs report, the stock market jumped down all the way down to 402, creating new lows here. And jumping down to the 1 hour chart here, you can see they actually rallied throughout the day. So big red bar on the report and rallied pretty strongly right up to resistance once again. And it looks like we're cooling off a little bit here. Just can't quite get through this resistance. And right now we have to assume that this resistance is going to hold until it doesn't. This long-term resistance is still strong from August. And I still believe that we're going to get at least some kind of retracement in here. Although I have to say this has held up much stronger than I thought. I thought it'd be very similar to what we saw in August where we touched it 1 or 2 days and then we were moving down strongly. So far we've touched it and we're 2 days here still sitting at the highs. So I guess it's still possible that over the next few days we're going to get down. But this is a little bit stronger than I thought that it would be at this point. Moving over to the NASDAQ on the hourly chart, similar story here. We came up. We went down, we came up, filled that gap down, and then it looks like we're starting to sell off here. If I had to guess a direction, I would say a little bit short on Monday, but that is a guess at this point. The markets have held up better than expected in my opinion, although you could argue that this is starting to be a little bit of a trend, creating a lower high here after the results, and that we could start moving in this direction. But of course, there's always time to jump in, and we don't have to try to predict that at this point. I think Monday should give us an opportunity if the market does move in that direction. Moving over to the IWM on the hourly chart, you can see similar pattern, but we did rally quite a bit stronger. You can see we came back and tested the highs from yesterday, closing the gap and then some, which is interesting because it did look weaker than the other major indices yesterday, but it did look stronger than them today. So it's interesting. It's good to know that the Russell still has some life in it. Jumping out to the 1 day chart here, you can still see this looks quite strong. There's still room to the upside here. Still room to the upside here in my opinion, and I'm not looking for this to slow down quite yet. Moving over to XLP here on the daily chart. This one has been a monster. It's rallied all the way from 66.40 to 77.19, through that trend line aggressively, and now we're actually retesting the August highs here in consumer staples. Clearly, this is a sector that investors are moving into out of concern for the recession that's potentially going to come next year or the year after. At this point, we should assume that that is a done deal and that that's going to happen with the strong inversions that we're seeing on bonds. But is this a good trade right now? The risk reward definitely does not look great. We're at resistance here, right at 77.50. We've touched that several times here, gapped through it in April, moved through it, reacted several times, retested here in May. We also tested it here in January of 2022 before moving down pretty dramatically. So definitely a tough spot. I would be taking some profits here. It's pretty hard to argue with taking some profits at this point. You've done well if you've been trading it to the long side. We definitely have some overextension here on RSI. Got overextended on Friday the 25th. And then we're extended here again on Wednesday the 30th. And we're right back at that point, still overextended. Doesn't mean that we can't go up a little bit more, but momentum is starting to fade here. And the reward, in my opinion, is to the downside. Even if you break through this, how much higher are you really going to go on this monster rally we've had? Probably not much higher. And the risk on that trade, where are you even going to place a stop? I don't know, 74. Doesn't look great in terms of risk reward. And hopefully this sells off a little bit and gives us some opportunity to get back in, maybe somewhere around $71.80 or $72. Moving over to transportation, IYT, you can see similar story here on the day. And we are just above that resistance again. So we retested on the daily chart and we've closed above it. Going down to the 1 hour, you can see gap into support, rally out of support. You could argue this is a lower high here and that we're starting to struggle. The 9 EMA is sliding to the downside here. Going back to the 1-day chart, if this does fall through here, that's going to be a big indicator to me that the overall markets are just waiting to fall, and that transportation is the leading indicator that I'm expecting to show me that the markets are planning to fall. Once I start seeing transportation move in that direction, I will start to be a little bit more bearish than I have been here recently. Moving over to top gainers for the day, once again, we have NEO. On that big rally that we had Wednesday, you can see here it was on top gainers. Did gap down and have a small red bar here, but still held up above support. And then we rallied from there, once again getting up to 13.13, down a little bit after hours here, but you have to assume that this is going to hold at this point, that we should be looking at this $17 price range here, in my opinion, for this rally to cool off. This has been a stock that's been beaten down really aggressively, and it's not unusual to see a pretty aggressive rally out of the lows. We do have one more for top gainers today. We have Trade Desk once again. Very similar pattern here to NEO, actually. Big green day 2 days ago. Doji, not as negative here on Trade Desk. And then another big green bar here today. And you have to argue that this bottom is really solid here. We have strong bottoming formation here, May through June and July. Tested it once again here in November. And now we've come back and tested 48.30 as this lower level. And this seems solid. In my opinion, this is going higher. And this is probably something that I should be adding to my IRA. It's a nicely priced stock here at $54. And it seems decent for option pricing. I do want to talk XLP here briefly on the daily chart. You can see this is really starting to roll over here. This topping formation is pretty much formed, in my opinion. And this really looks like it's going to start moving down here. Something similar to what we saw in August where we rolled over pretty aggressively. And it seems like we're kind of right here. You can see the very similar style of movement. We have a high, a dip, a little bit of a rally, and then a continuation down. We have a high, a dip, a little bit of a rally, and this seems like the start of a continuation down. Definitely keep your eye on this one if you want to trade it short. Looks like XOP is going to start moving down and potentially testing one of these lows here. Moving over to the dollar, we did have a red bar today. It did rally up here a little bit, retest that 105.50 level that we've been talking about. Then came back down here to 14.40 and it held. So that's interesting. Still waiting to see if this falls through. If we do get a break here, I would be looking for this to come down all the way to about 101.78. Back down into this area here. There's certainly going to be some buyers around 103.68. But really, I would be looking for this previous bottom in that area. If this does break down here on Monday, then we should expect stocks to rally from there. And that might give us the opportunity to break out of this channel that we've been in. This dollar cooling off might be the fuel that the stock market needs. Moving over to JNK. On the hourly chart, similar story, gap down, rallied up, back up to previous highs. So still looking strong, still in this channel here. It has not broken down yet. And you have to assume that this is going to move up towards the top of the channel until this firmly breaks down. As of right now, this still looks pretty strong in my opinion. Moving over to TLT, this rally continues pretty strong. Again, signifying that there is some buyers in the financial markets and potentially that this rally does have legs and that the bottom is in. Again, 110 is the stop point in my opinion for this rally. We came into contact with that first resistance here and it did stall out a little bit, but I think 110 is still a solid take profit for this rally. Moving over to the VIX on the daily chart, we did come back into contact with that trend line that we've been talking about. Still getting into oversold conditions here, still looks very weak. And this is another one of those indicators to me that's saying we have to go higher in the VIX and down in the markets. Moving over to my accounts for the day, you can see I made a little bit over $500, which was a great day for me, especially when the NASDAQ was down about $1.17 on the day. And we had some really strong volatility to the downside and then rallied pretty much throughout the day. If you watched my video yesterday, you would know I was short going into today, which worked pretty well. I did take profits on most of those trades. And you can see here, I still have the 200 shares and this covered call here that I had. So this is going to execute and these shares are going to go away. And then for Monday here, I have one put at 187 here on my IRA. And it's in a small profit here already, 65 cents total credit on that. So just a very small bullish position here on the IWM going into Monday. Hopefully you gathered from the charts that they're pretty mixed. There's definitely potential that we could still push to the downside based on transportation and the VIX being in position to move lower. But then you have things like the Russell that look very strong and the dollar that looks very weak, driving up the financial markets. So in my opinion, the markets look pretty mixed, waiting for a clear direction. And that's mainly why I'm almost out of the markets. Not completely, but almost completely out of the markets. Let me know down in the comment section what you think of the markets. Are we going lower or higher from here? Definitely seems like the risk reward is pretty low to the upside, but the markets have held up stronger than I've thought. Like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.